Welcome to today's Real Estate Investor Live webinar. I'm Neale Petersen. I'm the founder and editor-in-chief of Real Estate Investor, and it's a pleasure to have you joining us from around South Africa. And so welcome. And as you're logging in, please feel free just to drop a note in the chat box and let us know which area you're joining from. It's always great to see the breadth of our audience across the country. And so just so that you know, REI, we deliver daily and on-the-ground coverage on our digital news platform, our monthly magazine, our video interviews, these podcasts and webinars. And we, alongside with SAPN, we also educate investors, landlords, and professionals in the property industry with news, insights, and real-world intelligence and for best practice. So we also connect you directly to the people. It's great to see you all signing in and telling us where you're from. Afternoon to everybody. Welcome to see. Great to see you all. We also connect to people that that do the deals and shape the market. We're going to be talking a lot about that today. So just a few quick housekeeping points just before we begin. The session is being recorded, so just so that you know, we get that question a lot. And it will be available on our platforms, the REI website, and also we'll send it through to our newsletter subscribers as well. So if you have any questions, please drop them into the Q&A box at any time, and we will discuss them towards the end of the webinar. So just so that you know, today's webinar is presented in association with Absa and the Investor of the Year Awards 2026, powered by the South African Property Investors Network, which is SAPN. And we're discussing a topic that every property investor has probably asked at some point: what really separates South Africa's top 1% of property investors? Is it having more money? Is it owning more properties? Or is it about something far more important, like mindset and discipline, financial strategy, and making consistently better decisions over many years? So whether you're purchasing your very, very first investment property or already building a substantial portfolio, today's discussion is designed to provide practical insights that you can immediately apply to your own investor journey. So we also encourage you to participate throughout this webinar. You post your questions, as I said, in the Q&A section, and we'll reserve time towards the end of the session to answer as many as possible. So without further ado, I'm delighted to welcome our two very outstanding industry leaders. First of all, we've got Tshepo Mashashane, who is from Absa Home Loans, one of South Africa's leading property finance institutions. And he works closely with investors and homeowners every day and brings valuable insights into lending trends, investor behavior, market confidence, and how successful investors use finance to grow wealth. Welcome to you, Tshepo. And do you want to give a shout out to the audience here today?
Yes, Neale, thank you so much for having me. Such a pleasure for me to be invited to the session, and certainly looking forward to a fruitful engagement today as we're touching on a topic that's quite important to us as Absa Home Loans, which is really focusing on investors and wealth creation. Thanks, Neale.
Absolutely. Great having you at Tshepo. And then secondly, we've got Andrew Walker, and Andrew is the founder and CEO of SAPN, and he's also the co-founder of the Investor of the Year Awards. And over many years, he's worked with hundreds of South Africa's leading property investors, and he's helped identify and celebrate some of the country's most successful investment strategies and portfolios. Andrew, welcome to you. Great having you here once again. Do you want to give a shout out also to the audience?
Sure. And thank you, Neale. I mean, I'm super excited because, as you know, we're running the 5th Investor of the Year coming up in September on the 19th. And Neale, we are seeing such awesome deals coming through. So, guys, I'm looking forward to this chat with you, Neale, and you, Tshepo, to talk about what type of deals are we seeing, what's actually happening in the marketplace now. And there's a lot happening, which is awesome, eh?
That's fantastic. Great to have you. I look forward to it. So thank you, gentlemen, both for joining us. I think let's just jump straight into it. So Tshepo, let's start off with you. Before we start talking about investing, first tell us why Absa has chosen to partner with SAPN in the Investor of the Year Awards.
Neil, thank you. Thank you. I think three points that really made us to be able to partner with SEPN. I think the first one is as Absa Home Loans, one of our purpose, the key purpose that we have, we believe that we want to house the nation, and that's the reason why we wake up every day, and that on its own, I think, really links quite nicely with the work that investors are playing in South Africa. As we know, SSA reports that 24% of South Africans are renting. So that actually means that investors play a crucial role in terms of being able to house the nation. So that really links quite closely with the purpose that we have as a business. And then the second one is about wealth creation. We as Absa Home Loan want to be part of the story of investors that are out there to be able to create wealth for themselves and also for the next generation. So as you know, as Absa, we believe that your story matters, and hence this is so important for us to be able to play a part and walk the journey with investors as they pursue wealth creation. And lastly, it has to do with really the partnership. I think we've walked the journey with Andrew Seppen for a couple of years now, and this is one of those flagship programs that we have together, and we are quite proud of this partnership. And hence, we found that together there is this shared common understanding and also shared objectives in terms of the role that we want to be able to play in society. And hence, we've chosen this partnership then with SEP. And so, those are the key ones why we've really chosen to be able to be part of this Investor of the Year. No?
That's fantastic. That's great. And I think it's such a good initiative. And thanks to you, Tshepo, and to Absa. I think it's really taken, I think, the investors that we talk about to next level. And I'm sure Andrew will certainly agree with you that 100%. So, Andrew, you've been part of the judging. I mean, hundreds. You've seen hundreds of
Yeah.
Investor of the Year entries over the years, and people hear like, what is a top 1% investor? They often assume we're talking about wealthy people with huge portfolios. What actually separates outstanding investors from everyone else? Is it money? Is it mindset? Is it discipline or strategy? What is it?
Well, I think it's probably a mix of everything, hey, Neil. And in fact, let me share my screen with you very quickly. I want to
Yeah,
share something with you if that's okay. And we talk about entrance. We talk about, you know, can someone starting out actually win Investor of the Year? We talk about a lot of people have this myth, Neil, that in order to enter Investor of the Year, it's got to be the best deal in the world. I've got to have been investing for 5, 10, 15 years. And people often get a bit scared about investing or entering Investor of the Year. To give you an example, Neil, can you see on the screen, right on the right-hand side?
yeah.
That guy Peter Vessels, he started in 2025, so we 2026. So I only met Peter in 2025. He still doesn't own a property and he's entered Investor there because he's doing a rent to rent deal and he's converted a property in 4 ways, which is now a rent to rent. He's now doing his second deal, he's now doing his third deal. And this is someone that is using the property sector, the property market to generate profits for him. So, yes, he doesn't own it, but he's doing what's called the rent to rent. And these are some of the pictures of investors who have actually entered this year. And I think the great thing is, Neil, is that every investor has their own journey. Every investor, some of them are doing only student accommodation, some are doing multi-let, some are doing they're doing buy-to-let, some of them are flipping. And I think what comes with all of it, Neil, is they've a common trait with every single one, and obviously this is just a snapshot, there's hundreds of them. Their mindset plays a massive role, Neil. Plays a massive role. But now, Neil, you might have the best mindset in the world and you might buy the most beautiful property in the world. But if the property doesn't make financial sense, it doesn't make sense, does it? So it's a mix of have the right mindset. All these people you see here have been educated, and all these investors that you see here, and I've met pretty much every single one of them. They've got this commitment. They've got this attitude of property's not easy. Never give up. And just to share with you something that stood out for me, looking at the previous years, just to share with you, Neil and Tshepo, who won Investor of the Year before. You got Robin Cape Town, Mr. Francis from Cape Town, Donna Bonsai, and Patricia from Pretoria in 2024. Something with the 2019 winner. I remember, I think, Neil, you were there as well. We were on stage and you asked
Mhm.
me, What does it take to win Investor of the Year? What separates that 1%? When you have the conversation with these investors, the conversations aren't just about how much money did I make. The
Mm.
conversations are around long-term thinking. It's around the strategy. It's around the pivoting as and when things happen. But a big thing was their structures. People often overlook structures. So often people just go out and they buy properties in this name and that name. They don't care too much. But some of these winners, when we've looked at the actual structure from trust to companies, how they move money around, how they deal with their tax situations, that to me is definitely an investor who doesn't just summer go out and buy properties. That's an investor who really sits down and they plan, they think about it. They spend hours with the tax consultant. They don't just jump in and run and buy any property. They really plan it. And I've met some investors who have come through and I look at the property and go, geez, that's a fantastic profit. Wow. And then when you get into the planning stage, when you get into the exit stage, when you start asking the hard questions, they haven't planned anything, Neil. So to answer your question direct, what separates this, the 1%, the people that are coming through entering and the people that make it through are often people, yes, of course, the deal needs to make financial sense, but it's often the investors who are planning for the long term. What if interest rates go from 10.25 to 11 to 12 to 30? What if I've got to get out of the deal? And those are the 1% that plan for the future. I hope that answers your question.
No, absolutely. I think it's a good way to set the whole scene here for the discussion to follow. Andrew, thanks for that. Yeah, Tshepo. So, I mean, Absa has this wonderful thing called the Homeowner Sentiment Index. I mean, you've got some good data there, and you recently released the latest Homeowner Sentiment Index, and what it also does, it tracks investor confidence. So, maybe can you share with us, Tshepo, I mean, what is the latest sentiment telling us? And maybe tell us how investors are feeling about today's market, what opportunities they are seeing, despite we seeing, a bit of a blimp in the interest rates and also a little bit of economic uncertainty.
Neil, thanks for that. Yes, you're right. We run this survey every quarter, and we released the latest one for Q1 specifically. And maybe before I talk about the investor one in particular, when we ran this survey, the results that came out just overall, in terms of the overall sentiment, I think what it showed is that South Africans are very much confident as far as the residential property sector is concerned. The overall sentiment at the time grew from 87 to 88%, just really re-emphasizing the confidence that South Africans has on the property market. And we know that also at the moment we're seeing trends of even international buyers coming into South Africa to be able to purchase property. So that on its own speaks a lot in terms of how strong our property market is. But then if you really start then zooming in into the investor confidence, and this is the one where, as I've said earlier on, really those that are serving 24% of South Africans who are really choosing to be able to rent at this particular time. And that specific index actually grew from 85% to 87%. Now, that on its own, again, re-emphasizes the confidence that investors has. It means that there is demand that investors are seeing. I actually looked at that sentiment and looked at it from the different provinces, and you can definitely see that it is still quite strong in all the provinces. And you can definitely see that, yes, there are those specific metros where we know that there is much more activity happening, but also in other provinces as well, there's pockets of opportunities that investors are finding. And hence we are seeing it being quite strong in the different provinces there as well. So in essence, as of where we are at the moment, investors are feeling very confident, but also going into the future as well. They are quite confident. And this is despite all the things that you've mentioned. We know where we are at the moment with regards to the economic environment. We know about the geopolitical issues that are happening. But despite all of that, there's a strong confidence from investors as far as the property market is concerned, Daniel.
Excellent. No, great. Thanks for that. So confidence is up, which is good. Property is a very, very powerful asset class. We know that. So, Andrew, let's delve a little bit deeper. I mean, one of the questions investors ask most often is, can someone only with, say, one investment property or perhaps two or three? I know you alluded to it earlier on,
Yeah.
but can they realistically become investor of the year? So maybe you can share a little bit more. What do the judges actually look for? Is it the portfolio size? Is it something? Can you maybe just elaborate a little bit more, just to give those who are
Sure.
sitting on the side now and saying, "Hey, I think I'm going to go for this thing.
Yeah, no,
I'm going to enter."
absolutely. And
Yeah.
for that question, I'm going to share this screen with you, Neil. So first of all,
Hmm.
who can actually win? So when we look at the screen, main categories, you've got three in the main, right? I'm a beginner. I've just literally bought one investment property. That's it. Intermediate. Hey, Andrew, I've been investing for a number of years. I'm aggressively growing my portfolio. Now, Neil, this could be buy-to-lets, multi-lets, student accommodation, any strategy, or big leagues. Now we're doing the 20 million, the 50 million, the 100 million. Now, or everything else you see on the screen are subcategories, right? When somebody enters, Neil, they can enter two categories. They can enter beginner and rising star. They can enter intermediate and women in property. When it comes to actually winning investor of the year, you have to be in one of the two categories, intermediate or big league investor. So only those two categories. If you invest in intermediate or big, and I'll explain why, Neil. I remember being on stage a few times with Investor of the Year, and I look back at the last 5 years. What call it? It's actually it's 7 years, isn't it, since we started this? And Investor of the Year is it's awesome to have that investor who wins as well, someone that someone looks up to. And a few comments I got from the audience, a few comments I've had from partner sponsors over the years is, Andrew, if you've got three potential winners for Investor of the Year, someone who's only ever done one property investment, then you've got someone who's been building a portfolio aggressively for a few years and they've got three, four, five, six, seven properties, and you've got someone who's doing a development. They've been in the market for a very long time and they're building. A lot of feedback we got, Neil, is that actually they don't want to see someone who's only ever bought one property in their life when maybe they got lucky to be that investor of the year. So after consulting our partners, our sponsors, getting feedback from other entrants, the conclusion was, Neil, that to win investor of the year, you have to be either in the main category, two or three. But remember, when you do enter as an intermediate or a big league, you can then choose any other category as well. So you might actually end up winning the intermediate category as well as the Women in Property Award. So you can actually win two, but max two. So does that answer your question, Neil?
No, absolutely, definitely, and I'm sure maybe you can just go into those other subcategories again,
Yeah,
and
sure.
maybe just elaborate a little bit on each one of them because the
Sure.
rookie award just elaborate on those subcategories.
Absolutely. Because
Yeah.
you might actually get confused, right? If you see the main categories, it's a beginner, and then you'll see rookie award, eh? What's the
Yes.
difference? Here's the difference. The beginner, you can only have that one investment property. Whereas a rookie,
Mm,
Neil, to me, a rookie might be someone that's actually bought two properties. So the fact they've already owned two investment properties, they can't enter into the main category over there. However, they've
mm,
only got two properties. They're still a rookie. They're still learning, right?
mm,
Then you got the rising star. Now, the rising star came from someone that, because of their current portfolio, we actually know
mm,
that they can't win Investor of the Year because of something that's
mm,
happened. However, we've seen
mm,
ambition. We've seen this person, male or female, we've seen this person being aggressive, their mindset, their attitude, their learning, their education. We like, this is a rising star, and this person must come back next year and enter Investor of the Year again. Someone that we're really picking up, like, oh my gosh. So this isn't actually even specific to one specific deal. This is someone's journey, someone's story that's in the property market going, this person's going to be the next star in 2028 for Investor of the Year. Then, of course, youth and property, as you know, at SAPN, we have a space for youth. So this is for all investors up to the age of 30. So it might be your young 19-year-olds or 24-year-olds. They're youth, and they're getting into property space as well as women. So there's no space for us as men there, Neil. There's just the category for women. That's pretty straightforward. If you're a lady, if you're a woman, regardless of age, you can choose that as a category. And Community Impact Award. And the Township Investment Award, obviously the Township Investment Award, Neil, we're seeing a lot of investment going into Soweto, Tembisa, and townships around the country, which is amazing. So if you're doing something in the township, we want to hear about it. And the Community Impact Award, this is actually a really, really awesome one, Neil, because of the stories we've seen. So one a guy that won it a good few years ago. Just to give an example, there was a block of flats in Randburg. The block of flats, the owners had passed away. The kids were overseas in Australia, and there was a drug addict, not a drug addict, a drug lord in the block of flats. It was run down. There were vacancies. Of course, the people coming into that local area, they were going to buy drugs, and of course, for the neighboring properties, that immediate area was actually very run down. One of our Sappin clients went along very nervous. Long story short, bought the building, bought an installment sale agreement, evicted the drug dealer, got rid of them, which meant all that traffic that was coming in to buy drugs disappeared. He cleaned the building up and he rented it out. And he made an immediate impact to the local area. All the local blocks of flats, all the neighbors really loved him, and he made an impact. We've had stories of doctors in townships as well, building like 8 or 9 rooms for doctors and nurses, and like a mini hospital, right? Like a mini multi-let, which meant now to the community there's an impact, because now the people didn't have to walk to the town or the city. He brought the hospital to them. So anyone that's making an impact to any part, whether it's in a city, it's a suburb, it's a township, who's actually making a difference. And an innovative deal maker, Neil, this is also really exciting. There's a traditional way of buying
Yes.
property. You go to the bank, you get a bond, you get 100%, you put a tenant in, it's a buy to let, there's nothing special. Innovative. You must see how there's some investors who are doing seller financing. They're getting a deposit from a seller, perhaps. The banks are coming on board. They're raising money from other investors. They're changing the use of the property. They are just that they're being very innovative in terms of how they got the property across the line. And there are stories that will just shake your world. Like it's really
Fantastic.
inspiring. And
Making
then
an impact.
yeah, making a huge impact. And you're like, but you
Yeah.
look at the person going, but how the hell did you do that? And how did you have the courage to do that? And that's what Investor of the Year does. So if the deal is a traditional deal, it's a buy to let, it's a 100% bond. There's very little money going into it. There's nothing, yeah, of course you can enter it as a beginner, but they wouldn't go into the innovative category. And then
Okay.
new categories, just for a bit of fun, I'll quickly explain that to you. So
Yeah, please.
renovations under pressure award. So often, investors they may have owned a property for a good few years. The tenant leaves, and they've got to do a full renovation. They're under pressure, because they've got to pay their monthly bond. They've got to pay their rates and taxes. It's empty. It's prone to security issues. So we've seen some investors like really under pressure, having to turn a property around, and so it could be a property that was trashed. So we brought this in to go, we're not too worried about the financial impact of the return on the property. Show me, how much did you spend, and what impact did you make to the property, and how quick could you do it in, and do you have a story around your builder or your tradesman? So we just brought that in for a bit of fun as well. Then the tenant rehab award. This was a very interesting one because through Sappin, one of the biggest risks a landlord faces is a tenant not paying rent. And not a lot of tenants. When a tenant doesn't pay rent, what do you do? Now, I've been in the market for a very long time. The good success stories are when you can work with the tenant, and instead of kicking them out and getting rid of them, how do you turn a negative situation into a positive? Easier said than done. But we've seen it through SAP, and where we've seen some tenants where it's like, oh my gosh, what we're going to do? How do you turn the relationship around? And how do you go through a tenant rehab situation with that tenant? So very, very tricky category, but a very exciting one, because I want to hear from landlords. So again, nothing to do with the financial ROI of that property. How did you turn that negative tenant where it could have cost you way more money? How did you turn it around? And then, of course, best short-term award deal, Neil. It is what it says. It is short-term award, as you know. Airbnb, Booking.com. It's a massive strat for most investors these days. We do loads of workshops around Airbnb and Booking.com, and we're working with Miguel Martins on that. So we want to hear from landlords who both have a lot of investors now, they have the property they live in, and they may just be renting out their garage, so they convert the garage or room in the property. Some investors are going and doing rent to rent. Some investors are going and buying apartments in Cape Town CBD, Ballito, or Joburg, wherever. So anyone that's doing any type of short-term accommodation, be it ownership or rent to rent, we want to hear about it. And then, of course, SAPN Member of the Year. Neil, there's certain events with these certain SAPN members. They're rocking up to every single event. They're active on the WhatsApp groups. They're playing a part in the SAPN environment and making an impact to other SAPN members. So, yes, there's a lot over there. But as you can see, I've created a home for absolutely everyone. And in worst case, Neil, somebody enters Investor of the Year, and all they're going to get is support from SAPN.
Absolutely. No, great. Thanks for clarifying that, Andrew. Thanks very much. So, Tshepo, I want to come back to you. I mean, because we talk about interest rates. I mean, that's probably one of the biggest issues for, any property investor and anybody that's in the property game for that matter. But just from the bank's perspective, what separates investors who use debt intelligently from those who struggle? And maybe, what are the financial mistakes you can maybe share do you most commonly see that investors make along the way?
Thank you, Neil. I think maybe before I get into that, just listening to Andrew, just sharing the different categories, having had the pleasure in the last, Investor of the Year, seeing some of the winners, engaging with some of the runner-ups, and also just being able to see their journey of how far they've come. It's really remarkable, powerful stories, certainly, that are coming out of there. Neil, I think on your first point where you're talking about interest rates, if you just think about it, last year this time, we were all positive. We're in an interest rate cutting cycle. Inflation was under control. GDP, from a GDP perspective, there were projections in terms of continued growth that we were all looking forward to. So things were really, really looking up for us from an economic perspective. But then we came into this year, and what did happen? We know that the Middle East conflict happened, and that on its own started to be able to play a part, and hence we started seeing inflation again going up, and we started then being able to see a halt in terms of the interest rate cutting cycle as well, with the hike that we saw there as well. So that on its own just shows us that things can change. And why am I mentioning that? I think one of the powerful things that an investor can be able to do is how do you plan for those cycles? Because there is the known things that you are able to control. But there are those things where even if all the indicators are telling the positive story, but one needs to still be very much into that mindset of being able to plan for these different cycles that can be able to come through. And also we know that it's not just about the interest rate on its own, but it's the other factors. We know that now, for example, the fuel prices that went up. What does all of that actually mean? Electricity costs and all of these things that starts going up, that has an impact there as well. I think in terms of some of the mistakes, to your point, that investors can make, it's just really going down in terms of failing to plan properly, as far as those points that I've just mentioned now, in terms of the expected costs that you can be able to plan for, but two, also then being able to think about the unexpected things that can be able to happen. If the market turns, what do you do if all of those things happen? I know I've attended some of the networking sessions that Andrew and team run, and there's lots of strategies that the team is able to share, to say, as you start growing to become a seasoned investor, what are some of those things that you should be looking out for as part of the planning there? So I think really planning, but that type of planning means that one needs to get information as much as possible in terms of being able to understand where you are, and also then starting to be able to look into the future to ensure that you make the right informed decisions, Neil.
Great stuff. Thanks for that, Tshepo. And I think, Andrew, coming back to you, you've seen an enormous variety of investment strategies. So maybe just share what types of property investments are people actually entering into the Investor of the Award today? I mean, are they buy-to-lets? Is it property flips? Is it student accommodation? Is it small developments, multi-lets,
Yeah.
commercial? So which are the strategies that are currently standing out?
And it's a very good question, Neil, because there are a few strats that are actually standing out right now. And just before I answer that, coming back to you, Tshepo, one thing we just talk about with interest rates very quickly, Neil. One thing I always teach our clients, Neil, is when they run their numbers on the current interest rates, it's always a good idea to factor in what's called a stress test. So, for example, prime, let's just say prime's 10.25%. I always say to investors, make a decision based on the interest rate being 12.25%. If the deal works at 12.25%, at least, and if you buy prime, interest rates might go down, they might go up. At least you're giving yourself a buffer. So if interest rates do go to 10.5, 11, 11.5, the deal still makes financial sense. Because I think with where some investors go wrong, especially back in COVID when they bought at 7% and they didn't stress test their numbers, the deal just made financial sense at today's interest rates. But like you said, Neil and Sep, interest rates can go up, they can go down. So just a little tip for the beginners that are getting started. If you run your numbers and the deal just works, just stress test it to 1% or 2% above. Yes, of course, interest rates can go higher. At least you're building in a buffer. Just to put my advice there, Neil.
Excellent.
But yeah, but coming back to your question, so I'm definitely seeing a lot of short-term accommodation investors enter short-term accommodation. Of course, there is commercial and commercial investing, which is super exciting. That's also coming through. But if you said right now, between buy-to-let, development, multi-let, student accommodation, we are seeing a lot of short-term accommodation because we're finding that investors are doing that quite aggressively around the country. What is also exciting is we've had quite a few people enter, people that are going out buying properties in the Bryanston area, as an example, knocking it down and building like 20 to 30 units. So not your massive guys that are building, 2,000 units, 1,000 units, smaller players that are building, even like 15 units, 20 units, which I think is quite inspirational for the investor that's busy operating that wants to learn how to build and develop. So we've seen more of that, Neil, in this IoT than the last one. So developments, which is exciting, not a hell of a lot, Neil, but more than last time. We are seeing some buy-to-lets, not many buy-to-lets, and I think that's because most investors that do invest, they tend to go down the road of multi-lets and student accommodation. One thing we have found, just share with you, the one thing that we're very strict on, Neil, when people do enter their multi-lets and student accommodation, is making sure they're legal. I mean, as you'll know, Neil, lots of people do go buy a residential house, they convert it, they get the 6 units, 8 units, they don't change the zoning. So Sharp is making great profits, great location, great renovation, but we've got to make sure that the zoning's in place and all of that. So we do check that. But to answer your question, short-term accommodation, that's probably the most amount of applications in commercial and development. And then, of course, there's a steady inflow of multi-lets. And there's actually not many, but there are some flips. There aren't many, which is the buy to sell. There aren't a lot of those, but there are a few. But Neil, there's a couple of flips where I've seen profits of like 1.6 million, 800,000. So some exciting deals there, hey?
No, absolutely. No, thanks for sharing that, Andrew. So, Tshepo, coming back to you again, banks are still, competing aggressively for quality borrowers. I mean, obviously, you obviously in the home loans, which is residential space. So, where are you seeing experienced investors putting their money today? Can you see, in which strategies that they are using in some of those categories that Andrew shared with us?
Neil, thanks. I think that the starting point, in fact, we had a look at the numbers in terms of just where investors at the moment are mostly active throughout the country to be able to get a sense. And this is for H1 for 2026.
Yeah.
And I mean, quite interestingly to see that very much still an uptick in the Western Cape, followed by Gauteng and also KZN as well, coming back quite strongly. But also what was quite interesting is that, as I've said earlier, as we start to look at each and every province, you are able to see that there's still pockets of opportunities that investors are finding. So very much still a very strong active market that we have seen very much into H1 that we have seen there as well. But Neil, I think it's really dependent on the strategies that the investors wanting to be able to focus on. One of those things that we've spoken about was earlier on was student accommodation. We know
Mhm.
that there's a big need, and that's the starting point. The starting point is always to be able to understand where the need is and being able to address that need from a housing perspective. And that's one of those areas that we know. I think it has been widely reported in terms of the need that is there throughout the country. And I think even earlier this year, it was something that was also widely reported in terms of that. So just being able to understand that, and we certainly continue to be able to see investors wanting to be able to play a much more active role into that space there as well. But behaviorally as well, we are certainly seeing a bit of a shift there as well in terms of some that are just choosing to be able, as much as they're entering the job market, choosing to be able to stay a little bit longer, sometimes into renting. Other than to be able to jump into buying property. So there is that shift that is happening as well of those that wanting as well to be able to choose to rent even much longer. And it could just be from a consumer education perspective, or just also just from a customers also in terms of flexibilities that they're choosing. In fact, earlier in this year, that's one of the things that we have seen, that there are those young people that are also now having a different way outlook as far as home ownership is concerned, also leaning towards then this flexibility that renting is giving them in terms of being able to move and be able to move from one place to the other there as well. So that on its own, I'm mentioning it because that on its own provides opportunities even closer to working areas as well. So being able to identify those pockets of opportunities closer to areas of work, and also the first one that I spoke about that speaks about student accommodation. But largely, we certainly seeing, as I've said, the big metros and the big also provinces as well, still very active as far as investor activity is concerned, Daniel.
Okay, excellent. Thanks for that. Andrew, I see there's a comment there, gents. This isn't a topic of what separates the top 1%. I think we're going to get there, Razin. And there's a process to get to the top 1%. And I think, Andrew, within, we're looking at some examples of people that we do believe are actually in
Yeah.
that top 1%. So maybe without revealing confidential judging information, because these are the guys that are winning. Okay, so can you share one or two examples of previous Investor of the Year winners? And I think, Razin, we'll probably answer some of your question there. What specifically impressed the judges and ultimately separated those investors from everybody else? I mean, let's talk about the,
Yeah,
the, the
sure.
issue. We touched on it. Is it innovation? Is it financial returns, risk management, creativity? Because I think that's critical, because that it's almost like the golden nugget that investors are trying to look for, and
Of
also
course.
and also also implement for themselves. It's over to
Yeah,
you.
no, 100% say. So here's Dana Bunzai, right, from Bloemfontein. So if you ask me, but why is this guy in the 1%, and why did he win Investor of the Year back in 2019? And I'll tell you why he won. This is one of his deals in Bloemfontein. It's student accommodation. And maybe the question is, what puts him in the 1%, but what puts the other 99%? What doesn't make them qualify to be in this 1%? So if I try to go back to 2019, I remember I was on stage. It was between Dana and somebody else that is going to win. For us, profitability is very important, right? An investor invests in property to make good returns. So the first question is, as the 1%, are you making a good return on your money? If you're not making a good return on your money, keep your money in the bank. Why are you investing in property? So that's the first criteria, is are you actually going to make, because Neil, in South Africa, there are probably, if I say 99%, I'm probably over exaggerating here. But there's a large percentage of South Africans that are investing in property, or they think they're investing in property, that are actually losing money. They're buying in areas where there's no capital growth. They're buying in areas where they're not making a return. They're buying because of what's called the hope and pray strategy, which is one day I'm going to make money in property. Those are not the 1%. Someone like Dana Bonsai did research on this area. He looked at the last 10 years, what's been happening in the Bloemfontein area. He looked at suburbs. He downloaded Lightstone reports. He downloaded TPN reports. He looked at the area as itself. So before he even looked at the property, if I'm going to invest in this local area, I want to know what's the trend of freehold properties. Is it going up? Is it going down? Again, 1% do that level of area research. The 99% of people don't do it. They buy because perhaps someone told them it's a good area. What Dana also did is he planned out, we spoke about this before, he looked at his structure and he worked out that if he builds, which he did do, a portfolio of X amount of properties, I won't say exactly how many, he worked out that if he could put X amount of properties in one company, the shares held by a holding company, and the shares then held by his trust, because he was building it for a legacy. He's not buying for himself for now, he's buying for his kids. So he's thinking long term. A lot of investors that do invest, they might have the idea of thinking long term, but they don't plan today for the long term. So that's another thing that separates the 1% to the 99%, is everyone likes to think and plan for the future. No one executes it today in terms of getting the structure right. And how he structured it was he would buy X amount of properties in one PTY. He would then stop buying in a PTY and stop buying in a second PTY purely for risk mitigation. So some people might put all the eggs into one basket and all go into one PTY. He worked out with his tax advisor that let's buy 1, 2, 3, 4, 5 in one entity. Stop buying that entity. Let's go into the next entity. That's the level of planning he went into to go, if something happens to me or if something happens to a deal, how do I not risk that one PTY? That's the level of planning. So that's a big one, Neale. Judges will look at the profitability, but they want to know, are you thinking like an investor? Are we thinking short term or long term? What separates the 1% to 99% is then when we go look at buying the property. There's something called SAP, Strategy Area Property. What's your strategy? It might be Airbnb, it might be buy to let. For Dana, it was student accommodation. So Dana did a lot of research with regards to the tenants in the local area. He went to the universities. He spoke to NSFAS. He understood the difference between, if I go down the road of private tenants versus NSFAS tenants, what are the risks? He looked and he then ran the numbers, because as you know, he get paid for 10 months, not 12 months. A lot of investors, the untrained investors, what separates the 1% to 99% is, unfortunate, because they haven't been educated, they might run their numbers on 12 months worth of income. Or they might run it on 10 months worth of income and 12 months worth of expenses. But then, Neale, what they don't do is they don't then look at, you might fill your student accommodation property in the month of February, but you get to March, April, May, some of those tenants might actually leave and go somewhere else. So have you factored in those vacancies? So when we interviewed Dana, the 1%, he had actually worked in all the vacancies. He worked out, what happens if something happens and some tenants move out and I can't fill out and I can't fill those vacancies. Does the deal still make financial sense? So that's the level of planning and scenario planning that he did. Then when he bought the property, again, let's talk about the separation of 1% to 99%. Before he bought the property, he understood that he had to do a level of DD and research on the property. So when he viewed the property, he downloaded again the Lightstone reports on the property, the TPN reports on the property. When did the owner buy the property? Who is the owner? Why is the owner selling? How can he structure a deal so it's a win-win for the seller and the buyer? He then structured the OTP in such a way, the offer to purchase, that when he bought the property, he was in control of the offer to purchase. He put his terms in the offer to purchase to say, I will buy your property subject to, and he'd say, I need, at least 3 or 4 weeks. I've got to speak to you, which he did. He went to Absa. He got lending from Absa, actually, Absa in Bloemfontein, to say, I'm going to buy the property. I'm going to have to rezone the property and did a whole strategy with Absa, made sure that he rezoned the property. Another thing that separates 1% to 99, and I will actually say 99%, the amount of investors that are doing student accommodation, they're doing multi-lets, and they are not getting the correct zoning is scary. It's another thing that separates 1% to the 99%. Dana made sure that every single deal he did, he crossed his T's and he dotted his I's. He then went and he bought the property, and not just property, properties, the portfolio, and he kept his finger on the pulse. He's still employed to this day. He's what is it? Is it a physiotherapist? I've got to think about what yeah, I think it's a physiotherapist, Neil. Still practicing.
Yes.
But
Yeah.
unlike a lot of people, he understands his strengths and he understands his weaknesses. It's a big thing that separates us as investors. I always say, Neil, you can be the best investor in the world and you go buy the best deal in the world. But because you're a good investor does not make you a good manager of managing your own property. And that separates. He understood his strengths and weaknesses, what he could manage, what he could not manage. And he said to us where he knew his weaknesses were, he brought in the power team members to complement it. That's why he's built such a big portfolio. That's why he lives a great life. That's why he's got a good portfolio. And that's why when the judges heard the story, a few things came out, Neil. We saw financial return going, well, the deal clearly makes financial sense. The portfolio as a whole made financial sense. Then we challenged them and gone, yeah, but what about your exit? What about your legacy planning? And he had an answer to everything. Of course, we backed it up with documents and all of that going, geez, this guy's actually really thought about the legacy planning. Then we said, but how do you make a decision on property? Then he spoke about Lightstone, TP, and he spoke about exits. He spoke about putting a contingency in place for vacancies, for voids, for if you can't manage the property, you've got to pay a managing agent, for if those tenants leave throughout the year. So Neil, this guy, Dana, and same as the other investors of the year, right? That's what's separating this level of investor to the 99%, because the 99% will buy property based on emotion. It's called the hope and pray strategy, which I hope and pray that property prices are going to go up and I'm going to make my return one day. Where someone like this, Dana, gets into the deal now and makes money from day one, and he's thought of all the eventualities. So on the judging on the night, Neil, we're going to look at, did this deal make financial sense? Yes, fantastic. The next big thing for us is structure and tax. How have you structured the portfolio? Then we get into, tell us the story. The story is really important as well, because some people come from, backgrounds where they weren't born into money, backgrounds where they've had to, bring money in from all different stories. So that story for us is also very important. How you got the deal across the line. And then, of course, we want to know where they're going, what the exit strategy is. So there's a few things. It's a weighted score of 100%. And then we look at profitability, structure, tax, exit, story, and all of that. So it's actually a mix of all of it. But the financial return that's structured to me is very key. Hey?
Absolutely. So if I had to sum up everything, it's lots got to do with the habits of the individual, the good habits that they develop in all those areas that you spoke about, Andrew, and most important, taking continuous action all the time. And I think that's built in exactly what you described now. I think those is developing your habits, and Tshepo mentioned earlier, obviously your education, but most importantly, putting it into action. So there's a lot of, I see the top 1% that I've interviewed many times. It's, they're never across the finish line. They don't say I've won and that's the end goal. That's the destination.
Yeah.
It continues.
And I think, Neil, and to come in on that, one habit, or is it a habit? Is it a trait? Is it a common thing I see with all these experienced investors? Is they always say to me, even experienced guys, and I say, oh, but like, why are you coming to the event? Or you want to do this course? Why don't you do the course? Or why are you joining SAP? And whatever the case might be. And it's always the same thing, Andrew. And these are, excuse me. And I met a guy, so I want to share a story. I met a guy on Sunday in Cape Town. I was in Cape Town.
Yeah.
This guy is at another level. He's at a high level. I'm not going to disclose any information, but when I had the conversation, I was like, this guy's it's in Cape Town. He's playing at a very high level. I was like, but why are you here? He says, Andrew, you never ever stop learning. And if I can learn one thing from you, whether it's something I've never heard before, or you just remind me of something I learned years ago, and I can just take that back and I can apply it. And I found the 1%, the very wealthy, the very experienced investors are the investors that remain humble. They've got those good habits, like you say, and they remain humble and they keep getting educated. Whereas I've seen investors, they get they'll get educated for 1 year or 2 years, and they think that's it, and they stop getting educated,
I know.
and they think they know it all, and they stop that journey of education, and that's when most people quit.
Okay. No, thanks for that. I think that's such an important point to add over there. Tshepo, technology and artificial intelligence are changing, I think, across, every industry. I mean, how do you believe technology will influence property investing over the next decade? I mean, will we see successful investors increasingly use data and AI to make better decisions? Because certainly, I'm seeing it certainly from my side, there's a lot more AI. From your side?
Neil, absolutely. I mean, even ourselves, to your point, and even the banking landscape on its own is certainly changing, rapidly driven by digitization, AI, and so forth. And if I perhaps then put it from an investor lens, I mean, probably two of the important things that investors also are worried about, or at least wanting to be able to make the right decision, is number one is where to invest. I mean, that's why you've got, partners like your TPNs who are able to give you insights in terms of their area, crime statistics and all of those type of things there, just to be able to give you a sense of what that area looks like, default rates and all of those type of things there. And I think that that's probably also another area where AI will be able to play quite a crucial role in terms of being able to link up the profile of the investor and the opportunities that are there. I think it's going to be able to play quite an important role. The second one also that's important is how do I find quality tenants? It's always
Mm.
a big question that an investor has, and I think, and all of that, of course, there's lots of data at the moment that some of the players in the market are utilizing to be able to link up investors as well as the tenants there. But I think what is crucial here is that as we're seeing this technology, the AI coming through, it's important then for investors as well to start being able to getting closer to these capabilities and tools to help to make decisions, because that's the whole idea, to be able to leverage these to make the right decisions and to be able to do that even quicker. I think that's what AI is here to be able to do. So just those 2 points, I think it's going to be able to change the landscape quite significantly. In fact, last year we attended one of the conferences that we attended, and there was a speaker who was talking about just AI, the role that it's playing in terms of linking up as well those that wanting to buy as well as estate agents. Now, if you take
Hmm.
that already and flip it into this market, and these are things that are happening in Europe. He was sharing the
Yeah.
experiences of how that has already changed the market in Europe. So if you put it into the investor context, you can be able to
Yes.
see that that's going to play a crucial role now.
Excellent. Great for that, Tshepo. Okay, I've got a question here from Philip, and it's quite a broad one. He's saying, how can investor identify a good property practitioner? Now, Philip, I'm going to assume there's a number of practitioners. I mean, we could say an estate agent, a broker. We could also say a property manager. We could also say a mortgage originator. So maybe let's assume that we're talking about the latter, all of those that I've just mentioned now. And Philip asks, what red flag should I be aware of? Andrew, do you want to give that one a crack?
Yeah, sure. And it's a good question. So just to share with you, I've been an agent for 20 years. I wear two hats. I'm an investor, and I started my journey as an agent. And it's interesting to wear the two different hats because, as we know, with all practitioners, there's good practitioners and bad practitioners, the same as any industry.
Yeah.
And in the world, wherever you go in the world, England, America, Australia, South Africa, unfortunately, estate agents and letting agents, they just have a bad name. It is what it is, right? But there are some really good estate agents. And if you find them, it could be the difference of you finding good deals and not getting good deals. But the question is, how do you find them? So you know how if you own a business and you want to employ a member of staff, you're going to go through recruitment, aren't you? You're going to ask questions, you're going to vet them. That's what we do at Sapin. So if I come across an estate agent, they may say, "Hey Andrew, I've got this fantastic deal. It's going to make great returns. It's in a great area. It's already tenanted." Now the question is, what's a good deal to that agent? What's a good deal to me? A good deal to that agent who may be new to the market. They've never worked with property investors. They're just selling a property saying it's a good investment deal. So step number one would be, how do you find a good agent? What I would personally do is have that conversation. I'm a property investor. I'm looking for positive cash flowing deals. Have you worked with investors before? How long have you been an estate agent for? Do you know, do you understand ROIs and gross yields? I'll just have a conversation with the agent. And I'll say, okay, great. Could you send me a deal? You've told me it's a good deal. And can you tell me why it's a good deal? And I use the words pre-vet. I work with the individual to go, this agent actually doesn't understand the investment world, because there's a massive difference from an agent's perspective going, there's this first-time buyer world where first-time buyers just buy because they buy an emotion. There's nothing wrong with that. There's the investor world that will look at area, will look at the property itself, will look at renovations, will look at rezoning, will look at prepayment meters, will look at the financial return. So the only way to do that, Philip, is to actually engage with the agent, because some agents have been working with investors for a long time. They get the rezoning. I've seen some estate agents go buy properties on behalf of investors at the sheriff's auction. But the only way is to engage, to ask, and make sure they are registered. Ask them for their information. What firm do they work for, and are they registered as a practitioner. And then what I do, Neil, is I actually sometimes share a spreadsheet with them and say, just type in these specific fields. When you get a deal, the purchase price, the value, the rent, the expenses, and if it's green, send it back to me. If it's red, I don't want to see it. So I've actually trained some agents to become what I call investor agents. So they're an agent working for investors. That's how I do it.
Excellent. I think comprehensive answer. Thank you for that, Andrew. Guys, we're approaching the end. Can you believe it? We got around about plus minus 4 minutes to go. So what I'm going to ask each one of you is maybe just to get to your final wrap, your final thoughts, just maybe a minute there, starting with you, Tshepo. So, I mean, maybe just, imagine somebody's watching today's webinar, they own one investment property. The ambition is to become one of South Africa's leading investors. I mean, what advice would you give them today, Tshepo?
So, Neale, I'd probably mention three things. The first one, to be able to equip yourself with knowledge of how to leverage banking finance to be able to grow your own portfolio. That's quite an important one, because there's lots of opportunities as far as that is concerned. There's things like your buy-to-let proposition that helps you to be able to grow in terms of your portfolio. So that's number one. The second one is how to also be able to leverage equity of the properties that you own to be able to grow as an investor, because that on its own, it's a space that one can be able to get into that and start being able to leverage that equity to buy another property, and so forth and so forth. So just being able to equip yourself with that is quite an important one. And the third one, then again, also in terms of equipping yourself, is just in terms of the trends where they are going. We know that, for example, urbanization is here to stay. But if you are able then to be able to get on top of those insights in terms of where the growth is coming next, you can then be able to enter those markets quite early and be able to take advantage of some of those opportunities that are coming through there. So those are the three advices that I'll certainly share, Neale, as part of this discussion.
Excellent. So thanks for that, Tshepo. And I think what I pick up is if you become a friend of the bank, in other words, you manage those exactly what you said for each investor, you're going to give them more finance. And you essentially become the investor's friend. And Tshepo, you can back that, because Jarida just asked a quick question here. And if you could maybe just says, how does Absa assist a new investor to unlock equity in existing property with the director's credit profiles not looking great. How will you help this person? Well, I think you can guide them. Do you want to give a quick guide on that one? But we can always reach out to you, Jarida, where Tshepo can, so if you can give us, we'll certainly, I think, Tshepo, you can put your team or yourself, or you can help Jarida on that one. Do you want to have a quick comment on that?
Yeah, just quite quickly, and as you've said, I mean, it's always an individualized type of a conversation that we have. But of course, once we are able to get into your first property risk profile dependent, we also have got quite a number of propositions that are able to help customers to wanting to be able to buy property. Some of those are cost solutions that are able to help them to get into that as well. But once you start having the first property and you wanting to get into the second property, this is where I was talking about things like your buy to let. In simple terms, what it means is that we are able to look at your future rental income to help you then to be able to afford from an affordability perspective. Because sometimes that's the hurdle to say, I've got the first property, but I may not be able from an affordability perspective to afford a second, third property. So that's where we come in to be able to utilize those types of tools to help you to qualify. And that on its own goes a long way. And then lastly, of course, we look at it from an individual perspective. We are able to assist, but also if you're buying through an entity, we are also able to have that conversation. But as you said, Neale, it's probably one that has a conversation that has to look at the portfolio, so we can be able to provide better advice there.
Right, so I'm going to tell both Malefi and Jarida to reach out to Tshepo. We'll give those details through to you, Tshepo, and you can pass it on to your team. And so, Andrew, I want you to close off and maybe just tell us about the new, about the Investor of the Year Awards, where it's taking place. Who should consider entering, the types of deals that qualify, why should invest, when do they close? So maybe give us all those details.
Sure. 100%. I'll wrap it up for us. So first of all, guys, there's 100,000 Rand up for grabs. I think that's an awesome initiative for anyone just to enter. That's the overall prize for Investor of the Year. Now it's happening on the 19th of September. I've actually got a slide just for that. Before I jump to that slide, take note here, Neale. Absa Home Loans, Neale, Sapin. Next week on the 15th of July, we've got Investor of the Year happening live in person at the City Bowl in Century City. So make sure, Neale, if anyone wants to reach out to you, we'll give them all the information. If they want to attend the breakfast with Absa or they want to attend IOTY in the afternoon. And the judging, Neale, as we've said, anyone that's done a deal in the last 18 months, they can just go straight to the website, investoroftheyear.co.za. Step number 1, fill some basic information out. My team will then be in contact with you about you going, and we'll give you thumbs up or thumbs down. But step number 1, just go to investoroftheyear.co.za and just put a very basic high-level entry in. Now, entries will close. We're looking at, Neale, we've pushed it back to the second week of August. So I'm giving investors another couple of weeks. The second week of August will be closing. So there's still time for people to enter, with the main event happening on the 19th of September. It's a Saturday night, because the reason it's a Saturday night is people flying from all over the country. We're expecting about 200 people to be at that event. It's a black tie gala event happening at the Maslow Hotel. Again, for more information, ladies and gents, head straight to investoroftheyear.co.za to get all the information about the event.
Awesome. Great stuff. Thanks very much for that, Andrew and Tshepo. Gentlemen, thank you both for sharing your knowledge and your practical insights today. I mean, one of the biggest takeaways from today's discussion is that successful property investing isn't determined by how many properties you own or how much money you start with. It's about developing the right mindset, making disciplined financial decisions, doing the small things, doing all those habits that we discussed that Andrew and Tshepo shared with us, and maintaining a long-term investment strategy.